Well, happy Father's Day, everyone. Hey, it's Shooter. We're going to go over swing trade notes. Of course, at the end of this presentation, please do review our disclosures. Okay, now we're looking, with breadth wanning, typically, historically, when we have a robust June, we tend to have a weaker summer, which makes it a little more challenging. So I don't expect to have the breadth. In other words, where breadth was continuing expanding into June, I expect it to continue to wane into the later part of June, early July. So my thesis is to focus on, truthfully, weakness, but we're not going to be posting puts here. But focus on where we have some really solid setups that just are going to take some time to work that have pretty much put it in their bottoms. So, but let's start off just going through, last week, sort of a flat week, net results ended up being $105 a contract. But still, considering the week, we didn't do that bad. I always look at it this way. If I'm flat or making money, I'm doing it right. All right. So now my narrative this week is, we actually had a 1.7% gain on the S&P this week. So we were good. That CPI data gave us a little bit of a boost, even though some tech stocks are waning or rolling over. We're sort of through that earnings gap now. So we need to look at that. And, it's crucial, I think, with breadth that we focus on robust setups with longer dated positions so we can scale it. So what I'm saying is here, put a couple pieces on, wait for it to continue to work, add a couple more pieces, So break it down a little bit further. If you would normally have 3 entries, a starter, 0.5%, the full position, break it in half. Do 6 positions, a little piece here, a little piece there, a little piece there, a little piece here, et cetera, et cetera. Now, with, breadth fading, you're going to see 2 kinds of charts that I posted, daily charts and weekly charts. And, I'm trying to stay on the themes. One theme is interest rate reduction going into the end of the year, whether it happens in July, in September, or later in the year, October or December, or however the FOMC meetings are dated. I don't recall specifically the second. So when we have a weekly chart, that's the time frame. The plan is to trade it. Now, of course, if we get a really robust response, we might take profits before then, kind of thing. So I'll keep you up to speed on that. Now, one of the thesis, interest rate cuts really is, Kirk's theme. I'm just trying to tail it a little bit because I sort of liked it coming into this. And really my 2 big themes going into the end of June are rate cut and weak retail. So on the other side of the coin, I will be focusing a lot on, like Ross stores, for example, or like, for example, on Chipotle, on the other side here, as I want to get through this particular OptX because I think it's going to be really challenging. So, but looking at Camden Properties, it's not on the VSL. Let me clarify that. But I just really like the setup here. It's really horrible. It has crappy calls as far as options. They're too thin. There's no volume there. I mean, there are not even 100 contracts open. So now the first option is, of course, to try and sell some cash secured puts here. But I don't even know that we'll get filled there. This might just be a common share play. And based on this extended drawdown, and where we were, we have a divergent low here. So maybe try and sell the November 95 puts for around 240 a contract, and then roll up to the 100s once we get above the breakout line. Sort of the thought. Now, medical properties trust, we've looked at this a number of times, very similar. It just happened to be a chart I like here. We went up and we broke out, we rejected it, and now we're back to the base of the Vidya strategy. So I would expect it to flip just a little bearish again. So price maybe about 30 cents, 40 cents lower than where we are is a good spot. Best entry would be at 430. Now, I would not let it get below 292. That would be where I would have a stop, period. So maybe 290, 285, whatever it is. Now, I do like the calls here. So I like the $6 October calls and or the January $6 calls. Reason is they're flush, a lot of volume, right? And the spread isn't horrible. That's something I was struggling a lot with today, which is why I'm a little late getting this out, was finding stuff that made sense and it wasn't some kind of crazy premium we were going to pay and be upside down 15% before we even started. I always hate doing it. So this is our C. So we had an ABC pattern. So this is our C to the downside. So we got wave 5. So we're just starting here. Once this uptrend really gets rolling, our swing target, 50% back of this leg is way up at $13 from $5. I don't expect to run those $6 puts that $6 calls that long, but we might if we take the January. I'm not sure yet. It's just those were the strikes and the dates that I liked, because when you start scanning options as far as the contracts, no, we're not doing that. No. Oh, hey, that one looks pretty decent. That was sort of how it was. It took us a little while to find those, but that's what we have. All right, now let's take a look at Dell. I don't really like Dell. I don't like trading Dell. I really don't. It's not been an easy ticker because sometimes it has decent volume and sometimes it doesn't, but I like the look. So I would say we're going to keep a very tight stop, 127.50. So it closes below 127. I'm out. All right. I like it for 50% back, except for my minor wave one comes in at 149. So 50% back is like $1.53. Very good possibility this pushes. That's just into the gap. Now, one thing, when you get into the gap, it's very unusual where you don't get 50% of the way in the gap. And 50% is way the heck up here, like at 158.70. So we can get above this. It's got a good shot. So I'd start off with the August 140 calls and roll up the 145 calls once we get the break. Okay. So again, scale in little pieces here. All right. I'm just trying to say we got OptX next week, which is going to be a little challenging. So, that's something we want to keep in mind as well. All right. Now, Oxy, nice flush downward. The only thing I don't like here is that I'm seeing oil come down. I'm just candid. That's the quagmire. When you're as broad of an analyst as I am, and you look at so many different things, sometimes you get this bias. And my bias is that oil's going to come off. And the reason it's going to come off is because I was at $2.71 a gallon to pay for gas. Okay. That's pretty doggone cheap going into the summer. On top of that, I'm stopping, at Starbucks. Man, one person in front of me. When does that happen? Then I ran up to get some fries. The whole time I was there, nobody else. So when I start seeing stuff like that in my retail environment, I'm like, man, the consumer spent. Then I go to Walmart and it's like, I got like 10 choices where I want to park. And I'm like, what's going on? Well, it's Father's Day, first of all, because I sort of did my Father's Day yesterday with my kids, just because they had schedule conflicts. But, it was just, whenever I see that, it catches my attention. I'm like, hey, maybe retail does slow down. So I'm thinking there's a possibility that gas slows down because consumption slows down. And with that, that might bring oil prices down. But like we went to the oil conference and, I guess we're in this real tight oil. We also lost 5 wells this week. In other words, where they shut down. So we're getting into more of a tighter oil market. So, Oxy is a good play here, I think. We have some nice divergence. Our confirmed low on this leg down was here. So it's still in this uptrend. So we had our confirmed to wave 2 low, and we're putting in our primary wave 2, which is fairly broad. So this is like a flat we're probably going to develop. So, but I think 65 is a good shot. So if we push out and we stay really tight here, we're only at 59.85. So an August 62.50 call is very conservative. So, and then roll up once we get above the breakout to the $65 call. Okay. So that target price was above 61.26. However, I'm out at $58 if it continues lower, because it still could bleed lower. I mean, that's unfortunately when you start having this kind of lower flat build in RSI, it can extend out. There's really nothing that comes otherwise. And we had some, nice consecutive 3-cell candles, so it could continue lower. So I want to make sure you understand where you're exiting. Again, small pieces scale in, all right? Okay, now SMC, I don't ever like this one because when I'm wrong, I take a hit and it'll blow out 3 of my other long trades. I like to stay to a contract size around $500, okay? And if I take a position that has a $2,500 contract price, I have to figure that into my position sizes in those smaller positions, so one position doesn't just take me out. So, the challenging part here, do you really want to buy 950 calls here? Take the risk of being wrong, or do you want to sell 750 cash secured puts? Get a nice, simple, easy position. You're making it off the top. That's if you have the cash on the sidelines, for that margin number that you need to put on the cash secured puts, because it's a sizable number at $8.42 a share or $7.50 a share. What is that? 75 grand you're going to tie up? So it really depends on your position size, but I like it. Okay. And then, on that note, a close below the 14.6 fib at 750, 247, I'd be out. But we want to watch semi flows on this to take some time if we want to wait into I sort of would like to get one more low here on this speed line, only because I don't like the fact that we went to the 382 and we're rejected price right there. It implies we could head a little bit lower, right? And there was nothing else that would prohibit that from the count. This is an ABC, but what happens if this is A, this is B, then we get another C down here. So, but I just don't see AI selling off yet without some kind of news like, hey, it's been a scam. NVIDIA really doesn't have all these chips. Hey, then SMCI is going to crash, of course. But until we get some kind of news like that, that event's probably not going to happen. And then I'm going to say that's pretty much it that I have for the article this weekend, but I'm going to say stay tuned to chat because I'm going to post something in Rare Chat this week that I think is just a beautiful setup. I'm sort of mixed on whether I'm going to suggest taking it now or after Optex expires next. So I'm still sort of mixed on that, which is why it's not in this week's article. But great trading. Happy Father's Day. Hope you had a great time with your children, dads. Until next time.